Welcome to the debate. We are currently observing a massive system bug in the financial markets. Imagine a Michelin-starred restaurant. Inside, a sweating chef is physically integrating resources, browning meat, tossing vegetables in a pan, actually building tangible value.
Doing the actual physical labor.
Outside that kitchen, a crowd of 1 million people is entirely ignoring the food. They are gambling their life savings on the length of the line outside. They are placing frantic bets on exactly how many seconds it will take the chef to sprinkle salt.
Look, that sounds completely absurd when you frame it like that, but the chef is still cooking. The kitchen still functions.
The kitchen's function is being parasitized. This is the core question we are debating today. Is the current market a functional system for capital allocation, or is it a critical system error that fatally ignores the survival costs of the earth? I argue from the perspective of circular capitalism. The current ownership model is a fatal bug that actively dissipates physical resources.
And I have to push back on that from a completely different angle, because what you are calling a fatal bug is actually the intended functional software of modern capitalism. It is an operating system built on the premise of infinite growth. The crashes you see aren't system failures, they're just forced synchronizations with reality.
To diagnose this system error, we must correctly identify the participants. The line between capitalists and investors has been intentionally blurred to mask the dissipation. A true capitalist is a hardware engineer. They design the physical machine from zero. They integrate raw materials to create real value.
I mean, sure, they build the actual foundation. They take the physical risk.
The modern investor is not a capitalist. They are a data gamer. They sit safely removed from the physical constraints of the kitchen, merely monitoring the engine's RPMs on a digital screen. They trade digital scores.
But those data gamers are the ones funding the
They're driven by the fake gasoline of expectation. These market participants are generating massive amounts of body heat from a collective fever dream and mistaking the rising temperature of the room for forward motion.
Okay, hold on. You can call it a fever dream, but that distorted relay is exactly how the system crowdsources capital. The hardware engineer pays the physical risk to build the foundation, yes, but they rely on the investors buying that illusion of liquidity.
An illusion cannot fuel a physical supply chain.
It absolutely can. By chasing that illusion, the gamers inject the massive amounts of capital required to scale the physical engine. They might just be trading digital scores, but their capital allows the true hardware engineer to buy more physical resources. It works.
We are watching 1 million people violently fight over reservation tickets for a pizza that does not actually exist.
But they are pricing in future pizzas. They're incentivizing the building of new ovens.
The participants in this market are simultaneously stepping on the gas and the brake. They are cheering wildly simply because the speedometer is jumping up and down. This is a pure slot machine mentality. They are utterly disconnected from the physical limits of the vehicle.
I think you have to consider the scale of modern enterprise before you call it a slot machine. If someone is listening, they might wonder, how does trading a stock hurt the actual factory? Think about the dot-com bubble in the late 90s.
A prime example of catastrophic resource waste.
But it wasn't just waste. That was the ultimate casino. People were valuing companies with zero revenue at billions of dollars. Complete digital illusion. But what did that illusion actually fund?
It funded a profound misallocation of human intellect.
It funded the laying of millions of miles of physical fiber optic cables across the ocean floors. The illusion of speed, the jumping speedometer you mentioned, was the psychological incentive required to mobilize billions of dollars.
A psychological incentive that ended in widespread financial ruin when the tickets were revealed to be worthless.
The paper wealth evaporated, sure. The digital gamers lost their shirts, but the physical fiber optic cables remained. They became the foundation for the entire modern internet. If we only invested strictly based on the current exact caloric output of the pizza in the oven, we would never build the infrastructure to feed 1 billion people.
The infrastructure argument ignores the thermodynamic cost of the casino itself. Every second spent optimizing high-frequency trades is energy, computing power, and human capital stolen from the physical engine.
But as long as the machine keeps baking bread, the fluctuating price of the exchange tickets outside does not break the physical system.
The machine is running out of fuel while the crowd cheers for the tickets. You are mathematically conflating a change in stock price with actual success. True success is the integral of resource circulation over time.
Wait, let's translate that. When you say the integral of resource circulation, what does that actually mean for the guy running the factory?
It means a system is only successful if it creates a closed loop that sustains itself. The biological and physical resources must cycle back into the earth. That is circular capitalism. What you are defending is a linear system of extraction that ends in a landfill, artificially driving up the survival cost of life.
How does trading a digital number drive up the survival cost of life? Walk me through that causality.
Let us observe a hardware engineer who builds washing machines. They design a durable physical engine that lasts 30 years. But the data gamers demand a 10% increase in the digital score this quarter.
Well, they want a return on their investment.
To pump the digital RPM monitor, the company swaps out metal gears for cheap plastic ones. The machines now break in 3 years. The stock hits record highs. The gamers trigger their slot machine payout. But physically, we are mining more ore, burning more energy, and filling landfills with broken metal.
Look, that is a compelling example of misaligned incentives. I'll give you the plastic gears.
It is thermodynamic destruction masquerading as economic triumph. Imagine we are on an airplane hurtling through the sky. The fuel gauge is dropping towards zero. The engines are sputtering. And your functional market is a cabin crew entirely obsessed with the resale value of the in-flight peanuts.
Wow.
The peanuts are trading at record highs. The crew is ecstatic. But the plane is running out of fuel, and the peanut valuations will not alter the physics of the impending crash.
I mean, the airplane metaphor is dramatic, but I actually think it highlights why the physical layer is far more resilient than you admit. Yes, the players in the market are screaming and trading peanuts. They suffer from a psychological delusion because they falsely believe numbers can be eaten.
And yet you defend the delusion?
Because I've caught myself staring at a red portfolio screen, wondering if the world is ending. I understand the fever dream, but this digital fever dream does not fundamentally destroy the physical engine of the airplane. The engines operate on physics, not on peanut valuations.
The crew is ripping physical parts out of the engine to sell more peanuts. My washing machine example proves the data gamers actively degrade the physical hardware.
In some micro cases, yes, there is resource dissipation, but look at the macro level. When the physical limits are finally reached, when the plane needs to land, or when resources hit a hard constraint, the system forces a hard stop. That's the crash.
A system that requires a violent, catastrophic impact with the ground to shed bloat is a failed system.
It doesn't shatter the earth. The price of the physical inputs skyrockets, the paper wealth evaporates, but the physical assets, the planes, the factories, the kitchens, they remain. The system doesn't end, it corrects. It burns off the digital noise.
The 2008 financial crisis was not a harmless burn-off of digital noise. We allowed the digital illusion of mortgage-backed securities to completely detach from the physical reality of actual homes. When gravity hit, people lost their physical shelter. Relying on a crash to fix the system is a fatal surrender of human intellect.
But can you manually fix it? That is where your theory completely loses me. You cannot manually debug this system from within because the operating system of capitalism is driven by human nature itself.
Human nature is a convenient excuse for catastrophic engineering.
It's not an excuse, it's a design constraint. The desire for accumulation, the appetite for risk, these are deeply ingrained. You cannot legislate away the crowd outside the restaurant. The system automatically attempts to reset when it hits the floor of physical limits. That is the ultimate expression of decentralized reality testing.
If we know the pizza reservation tickets are a delusion, if we know that biting into a stock certificate valued at $10 million will only yield the taste of paper, defending the delusion is irrational. We are redirecting the brilliant minds of an entire generation toward the high-frequency trading of these tickets.
Because that massive casino is the ultimate liquidity provider. When a true hardware engineer needs capital to build a massive solar farm or a revolutionary battery, The capital's immediately available, priced by millions of independent inputs.
They are efficiently pumping fake gasoline into a doomed paradigm.
If you remove the possibility of infinite growth, if you strip away the casino, you remove the incentive to build a restaurant in the first place. Who takes the catastrophic physical risk of building a global supply chain if the only reward is a perfectly balanced circular equilibrium?
The biological imperative to sustain life is the only incentive required to build.
On a small scale, maybe, but the illusion of infinite wealth is the bait that tricks humanity into building massive infrastructure. When the pizza tickets hit $1 million, 20 new chefs are incentivized to build 20 new ovens. The illusion collapses, the investors are wiped out, but society now has 20 new ovens. It physically expands the carrying capacity of the world.
Expanding carrying capacity through the destruction of the ecosystem is a mathematical contradiction. You do not gain 20 functional ovens. You gain 20 rusted hulks of misallocated metals sitting in a degraded environment, funded by vaporized capital.
I think you are vastly underestimating our ability to repurpose those hulks. We adapt.
Physical reality is not infinitely elastic. The rare earth metals and energy used to build those useless ovens cannot be digitally restored. They are permanently dissipated. This is the core flaw in the infinite growth software. It assumes the earth can absorb endless cycles of speculative waste. It cannot.
But the gravity of the market forces an eventual reckoning with that exact reality. When resources actually become scarce, the price skyrockets. The digital fever dream becomes mathematically impossible to sustain, and the casino shuts down naturally.
By the time the casino shuts down from raw resource scarcity, the planetary repair cost is unpayable. We cannot wait for gravity to forcefully shatter an unsustainable illusion. That is a willful march towards system failure.
The correction is brutal. I will definitely acknowledge that. But it works. The digital casino, while absurd on its face, will naturally and forcefully be corrected by the gravity of physical limits. It leaves only true value behind. I mean, we are both looking at the exact same reality today. We both agree that true value does not exist on a flashing stock monitor.
The digital numbers cannot be eaten.
Exactly. True value exists in the kitchen with the sweating chef who ignores the gamblers and continues to brown the pan. My argument is simply that we shouldn't burn down the casino because it is paying the chef's rent. We just have to survive the crashes.
The existing system will collapse under the weight of its own thermodynamic contradictions before the rent is ever paid. We must step away from the casino entirely. The digital scores on the monitor are a terminal distraction from the physical reality of the kitchen. A conscious, structural shift to circular capitalism, where the engine actually circulates resources rather than dissipating them for digital points, is the only rational investment for human survival. The reservation tickets are worthless. There is no alternative software. There is only the physical hardware of the Earth, and the current operating system is driving it to total failure.